Hey, and welcome back to Options Traders Academy. I am Dr. Christiana Anise. In today's lesson, we are in lesson 2. What is a call versus a put? And for those of you who have access to the Options Traders GPT, formerly known as the 24-hour Trade and Invest GPT, great job, because you have access to all of this information 24 hours, 7 days a week, whenever you want it and whenever you need it. So you don't have to wait for us to provide a lesson, course, information, or whatever. You have the tools, you have the strategies, and everything you need to succeed at the palm of your hand. So use that, keep learning, earning, and growing, and congratulations, because that tool alone puts you 100 steps further than anyone else that doesn't have that tool. All right, so let's dive into lesson 2 of options trading for beginners. All right, so for this lesson, we are going to go straight into what is a call versus a put. Options comes in 2 flavors, all right, and each one is a bet on a direction. Now, actually, option comes in 3 flavors, because you can trade sideways, even though it's really not a good thing to do. But there are some people that have mastered the trading, trading sideways. I call it basically, what is that? A consolidation. When it's going sideways, I call it consolidating. But for me, it's either up or down. And mainly, I like to go for bullish contracts or whatever. That's just me. You'll find your own way and own strategies as time goes on. All right. All right. So first and foremost, a call goes up. That's bullish. You buy the stock at the strike price, and then a put goes down, and that's bearish. All right, you sell the stock at a strike price. Simple as that. Put goes down, call goes up. All right, put is bearish, a call is bullish. All right, now here's an example for a call option. Let's say you're watching SPY. It is not currently at 450. This is just an example. We are way past that. But currently at 450, and you think it'll go up. So you buy a 455 call expiring next week for, it looks like $2, but that's actually $200. All right. And another thing is, when you buy a contract, again, you can only lose what you put in, but at the same time, you can get out at any time. You don't have to use, all of your money up in that one trade. You can definitely, if you see that it's negative 20%, that's kind of my time where I say I'm pulling out. When I see it's like negative 20%, I'm out of there. I'm not going to sit and wait and pray and hope that it turns around in my favor. When you see that you're losing money, get out of there. There's no reason to keep staying and praying. You're gambling at that point. So at the end of the day, yes, if you see this does not mean $2. This means $200. Now, what you want now, you want SPY to rise above 455 before expiration. Okay, so the price at expiration, say 460, worth $5, so you made $3, which is a $300 gain. 455 worth $0, so you lost $2, which is a $200 loss. Or 452 worth 0, so you're still out of the money. All right, and I know that it can still seem a little confusing at times, but the more that you do it, the more that you are in the market, the more that you educate yourself. That's why I tell people, build the skill before you actually try to trade the market. All right, I know FOMO is going to kick in. I know most people are like, I want to get to the money, but if you're anxious for money and you need money bad, trading should not be your first option. Trading should be your last option, because you need to concentrate on finding a steady stream of consistent income that can help you with your financial distress. All right, so I am not a financial advisor. I'm just here to educate you and help you learn a new skill that can help you pay the bills eventually. Okay. All right. So put is the same thing. I'm not going to go through the example. I mean, you can see it for yourself. You can screenshot it or whatever. This is let's move forward. So a visual memory trick. Okay. So call me if it's going up. Put it down if it's going down. That's cute. All right. That's a good way of remembering it. Okay. Call me if it's going up. Put it down if it's going down. I like that. Now, key differences recap. Now, feature market direction. You want price to go up. You want price to go down. if it's a put. If it's a call, you want it to go up. If it's a put, you want it to go down. Simple as that. You can, for a call, buy the stock at strike. For a put, sell the stock, at strike. Example use: bullish news, breakout chart. Bearish earnings, recession fear. Those are when puts are made, like during bearish earnings or recession, like they think that, the market is going to go into a recession. That's when you'll start seeing people loading up on puts, not put calls, but put contracts. And then, bullish news, or, the market is just hot and just doing good. And you check that VIX, VIX, definitely check that VIX, because it's going to give you the temperature of the market. All right. And if you see that the temperature is good, then you already know the calls, the bulls are going to come in, all right? Now, a pro tip: call equals you want the buyer of the stock, you want to be the buyer of the stock at a lower price. Put equals you want to be the seller of the stock at a higher price, okay? So what's next? Would you like to go on to lesson 3? Yes, we do. So we're going to go on lesson 3, because lesson 2 was kind of like a brief summary of lesson 1, I want to say. So, we're just going to go right on into lesson 3. So this is like a 2-in-1. All right, so let's get started. And again, if you have the Options Traders GPT, you have all this information. All you have to do is click a button, and the whole course, the whole program is already loaded into that GPT, okay? All right, so lesson 3, how to buy your first option on Robinhood. And yes, we use Robinhood. Yes, there's other platforms, but you use what's best for you. We use Robinhood because it's best for us, and it's easy for me to teach that way, okay? All right, so the goal is to place your first options trade with confidence, buying a call or a put. Totally and completely up to you. I will never tell you what to actually buy, because that's not what I'm here for. I'm here to educate you on a skill, on something that you can use to build your portfolio, something that you can use to build a legacy and empire. However, it is not my job to tell you exactly what play I'm going to make. If I see that there is a ticker or whatever, ETF, whatever, stock or whatever, that may be bullish or may be a good setup, I'll probably put that ticker out there. I'll give what I call my hit list, top picks, but I'm not going to tell someone what to do, because again, I'm not a financial advisor. I don't have my licenses, to be out there telling people what to buy and what to do. It's just not me. All right. I'm here to educate you on learning this skill, turning you into from a beginner to a winner. Okay. But I'm not here to do the work for you. I'm always telling people, do your own due diligence, because when you do your own due diligence, that is how you're going to learn this, not by me telling you, okay, this is what I'm going to do today. This is how much I'm going to put in. This is how much I'm making. It's not about me. It's about you. So worry about your own self. Worry about your own portfolio. Don't worry about what everybody else is doing. All right, so step-by-step walkthrough. Now, step 1, you want to open your Robinhood app. That's going to be your trading platform. Now, it is free to do, so if you had that question in the back of your mind, you do have to fund your account, but it's free to open the account. 2, you want to type in SPY in the search bar. SPY is the safest stock to practice with, because I call it the beginner, the starter stock. Definitely there's always money in SPY. It may not be hundreds and thousands of dollars, but at the end of the day, there's always money in SPY. Number 3, you want to tap on trade, and you want to trade options. Now, this opens the options chain. You want to pick now, I want to go back. Okay, so this is a step-by-step walkthrough for someone who already has their options Robinhood account set up. Okay, so that's number 1. You have to set up your account first to be qualified and eligible for options trading. And if you don't know how to do that, if you go and download the Options Traders GPT, the link will be below. It gives you step-by-step how to do all of that stuff and more. All right, so if you don't know how to do that and get approved, just download the software, and it's going to give you everything. Okay. All right, so once you tap on trade options, this opens up the options chain. You want to pick an expiration date like next Friday. Give yourself time, give yourself grace. This is how long your bet lasts or contract lasts. All right, you want to choose a stock price that makes sense. This is your bet level. All right, you want to tap buy call or buy put. So you're going to pick the direction. You're either going to go up for a call or you're going to go down for a put. You enter how many contracts that you want to start with, and we always advise just starting with one contract, because that one contract is 100 shares that you control, and then you tap review, you swipe up, and you're in the game. Okay, it's literally easy as that, you guys. And once you get into the habit of being able to get into a contract and get out of that contract with ease, then you can start, moving around the board and things like that. But for right now, just get into the habit, stick to SPY, get into the habit of getting in a contract, getting out of contract, understand what you're looking at. We haven't gotten to the Greeks and all of that stuff yet, but that plays a major role, your deltas, your theta, all of that stuff we'll get into a little later. But okay, you do want to build your skill before you start really just trying to trade other stocks or, indexes or whatever the case may be, whatever you want to trade. Stick to SPY first if you're a beginner. Master that and then move on. Okay? All right. Now, how much does it cost? So let's say you buy a SPY contract or call contract for $2. Not $2, but it looks like $2, but it's $200, because that's $200 total cost, because one contract, remember, is 100 shares. All right. So this is your mass risk. You can't lose no more than $200. Now, example scenario would be your call. You're betting on SPY that goes up. The contract was strike price, is 450. You have an expiration for next Friday, and you have it to where it is $200. Okay, so if SPY goes to 455, that call is worth $5. Sell it for 500 minus your 200 cost equals $300 profit. It's literally that simple, you guys. Okay, don't make it more complicated than what it is. Okay. All right, now risk reminder, only risk what you're okay with losing. I told you that before. Options can expire worthless, all right? So you want to also get out of that contract before it expires. You want to start small with one contract. Practice first. I would strongly suggest doing watch lists or paper trading first before you start using your hard-earned money. You don't want to ever chase the hype. You want to react. Use structure and not emotion, all right? All right, you guys, so your homework for today is to set up your Robinhood accounts if you haven't already. And if you've already set up your Robinhood account and you've been approved for options, congratulations. Now's the time to get in there and start, scoping out some of the SPY information and find out, what your next trade is going to be, and paper trade first and use that watch list and, take your time, all right? All right, I am Dr. Christiana Anise. Until next time, talk to you later.